Yeah, hard money lender is basically, for the most part, it's private money. There's really not no bank affiliation with it. They charge higher interest rates. They charge points at the end of a deal. So yeah, you could, instead of paying a 7% for a bank loan now, you might be up to 12 to 15% with a hard money lender. So it has to be fast and furious if you're using hard money. There's no time to sit on your thumbs. It's got to be now. You got to get everything done. It's got to be done now. Predominantly, most people that are using hard money lenders are people that are getting started. They're just getting in the industry. Banks nowadays are very, very tight with their money. If you're going in with an idea that you're going to flip a house or renovate a house, good luck. If you can find a small town bank, they'll work with some people occasionally. But for the most part, hard money is for people getting started. Then you get a little bit of a resume built. Then you can go to a traditional bank, and then they might work with you. That's where the hard money comes in. I will start by saying my wife and I have been fortunate, we have never had to deal with hard money. And the reason why we never did is because the people that are lending that money truly have a thumb on you. I mean, they're really involved versus outside of a bank. And, they're going to cover their interest, hard money lenders. So if you happen to default, if you slack on getting a project done, they're going to come in, they're going to get that project from you, and they're going to finish it, So yeah, it's an interesting side of the business, hard money lending. Yeah, so I mean, traditional lending, if you can stay in a conventional loan of some sort for purchasing a house to renovate, that's a lot better way to go. What that entails though is you got to have a substantial amount of money in the bank. Banks want to see about 25% down, and then you bring a business model to them, and then they'll set up the purchase price, and then they set up another loan on top of that for fix-it-up repairs, and you do draws on that in a timely basis. If you're going to do flooring, here's your flooring draw to pay your contractors. But yes, if you can stick with traditional lending, that's definitely where a person needs to be. I would say if a person could find the leads and you've used up all your resources as far as maybe cash that you have yourself, or you've tapped all the banks out, all the more money that they're going to loan you, but you're still getting a tremendous amount of leads and the money's there and it makes sense, stick with some hard lending. Your profit margins are obviously going to be lower, but that would be where I would see a person would stick with hard money lending. Yeah, very much so. Yes, if you're gonna approach a hard money lender, you definitely have to have a business model in place. You got to be able to speak the language. You can't just go in there and tell them, "Hey, it looks fun. I watched it on HGTV." You gotta, and not necessarily saying you got to know everything about it, but you got to have a list of contractors that you're showing them that you know what you're doing. You know who you're supposed to be contacting, and that their money is getting put in a safe place. And like I say, they're going to stay involved. And unlike a bank that would loan you money and not swing by them, people are swinging by that house. They're going to see where their money's getting put at. If you say you're putting in flooring, they're going to verify you're putting in flooring. It's that simple.